One of the things whenever I talk about markets, I also believe that we're entering the early stages of a bull market. Everyone's like, how can that be? We're going into recession or we're in a recession. Things are so bad. There's all this stuff happening. Banks are failing. Like, how can assets go up in price? You know what I mean? This is a common thought by many people. I'm wondering if you can just kind of walk us through the dynamics that are at play here of like, okay, maybe we are in recession right now. We're going into recession. Maybe things get worse, and they probably will over the coming months, especially if interest rates stay at the height they're currently at. And then you have this conversation of, well, currencies are all screwed up and maybe we're not going to be using the US dollar so much anymore. Like, how can that still be bullish for assets? Can you sort of just like walk us through how that all makes sense so that people can wrap their head around that?
2008 was a pretty important year for the way we understand money because suddenly banks got too big to fail. Suddenly, infinite bailouts were put on the table. And this is exactly what has distorted markets. Effectively, the US went into a recession last year if you base it on historical metrics of how we count recessions. However, the White House came out and said, well, we don't actually do that anymore. We have a little organization of 5 or 6 guys in a room and they say when there's a recession or not. And so everything has been completely distorted in markets. So when you understand everything's being completely distorted in markets, all these ways that we understand how things have worked can be challenged. And so if there's a recession officially declared in the USA, it's basically already been a fact for a while by that point. Mm-hmm. And we're seeing a lot of things challenging that. Inflation's coming down. Company earnings aren't all that bad. Yeah, banks are collapsing, but banks collapse. Everybody's just taking their money over to JP Morgan. Big banks get bigger, et cetera, et cetera. The key thing that's come out of this banking collapse crisis, though, is infinite money printing once again. You see there's 100 regional banks or something in the United States at risk of collapse. But what have they said in response to that? Look, we know you guys are sitting on $620 billion, which is the FDIC's estimate at the time that the first bank collapse happened, and it would be bigger now. But they said, we know that these banks are sitting on $620 billion of unrealized losses, meaning that people want to go take their money out of the bank, they have to realize the losses and the banks collapse, essentially. That's a pretty tricky situation. You don't want to have this crisis of confidence in the US banking sector, which is already happening, but they want to mitigate that as much as possible. So they've gone to say, hey, we're going to launch this bank term funding program, which is essentially a giant money printing program where they're going to guarantee the treasury bonds, the mortgage-backed securities, all this stuff that all these banks are holding because they couldn't find enough people to give house loans and stuff to. So they started investing all that money, acting like hedge funds, investing all their money into treasuries and into these mortgage-backed securities, which fluctuate in value, right? They're not always worth a clear price. And now we have that massive losses sitting there. So not only did the Federal Reserve roll out this program to cover hundreds of billions of dollars of losses in the USA, they extended that program internationally to Japan, to Canada, to the UK, and to the European Union. So this is a pretty big deal. So we have them essentially saying to foreign central banks, don't worry, all your local banks that are also sitting on giant unrealized losses because they bought US treasuries and because they bought US mortgage-backed securities, we're going to cover that tab too. So this creates a situation of nothing is allowed to fail in the markets. Money will be printed. And as we see money printing come into play, markets can indeed rise. Now, look, if there is a US recession, US equities will be hit. That'll be a near certainty. But how bad they're hit, how shallow or how deep of a recession is, I mean, if you go to social media, you get every range of opinion from there'll be no recession, there'll be a super shallow recession, so this is the new Great Depression. Buy guns and food now because your money will be worth nothing. Okay. Chances are things will not be that bad though because, again, central banks have distorted everything.